This is Eric Mother, mother.com, with an educational video covering divergence. Now, we all know that divergence is a good way to technically look at a market to see whether there's a pullback, as we can see in this area here, where we had prices improving to higher highs. At the same time, we can see the RSI was making lower and lower highs. So because of that negative divergence, we see that ultimately this was good enough to bring prices lower here. So that's the usefulness of the RSI. Now, the question in this video is, what happens if an instrument, having shown divergence, for example, if this was the situation here, this was the line of divergence, what would happen to prices if the RSI actually comes back and jumps above the divergence line? So the question is, what would happen if the market clears the RSI divergence line? And also there's another question I'd like to answer in this video. What would happen if down the road the same line can be used to gauge market swing trade direction? All right, let's answer those. So we're going to use the current chart. This is going to be pretty much a follow-up to a recent video I did on this instrument, LABU, a biotech ETF. We can see here an improvement in prices day to day, this being a daily chart, and then we had divergence here. So the indication was this is setting up for a pullback. Now, remember, I've been talking about really you don't get a big sell-off until you break RSI lows line. So for example, the only way this instrument was going to see a sharp drop was a break below this line. Otherwise, all pullbacks were going to be shallow. Or we can even say that there's a more recent trend line here on the daily. It would have to break below either of these two lines before seeing a drop to the downside. But for the purpose of this video, we can see that there's definitely divergence of the price moving higher, the RSI making a lower high. Now, what we're going to do is, so this was about 3 weeks ago. Okay, and I'm going to now take a look at the current chart and show you what would happen when a market moves above this divergence line here. So we're going to fast forward. So this is about 3 weeks ago. Let's take a look at the current chart. Now, by the way, take note of prices. We can see here prices had stalled around 130 on a daily closing basis, while the formation of this negative divergence was taking place. Now, if we take a look at the current chart, let me update that to get the current quote. We can see prices have gone now as high as 180 over the last 3 weeks or so, maybe 2 weeks. And we can see here the line that I was drawing, which was divergence. Actually, the market would come back and clear this line. So we can see that from this example, it's a good way of understanding what happened when a market clears a divergence line. What you get is the exact opposite reaction. Instead of a sell signal, the market has taken out the resistance line on the RSI, and now you get a swing trade to the upside. One thing I should also point out here is there's another message here. The RSI did not drop below 50 during the pullback here, which is this period. And that is a sign of strength by itself. Now, even on this daily chart, we can see that we don't get a true sell-off in this market, in this instrument, until it breaks either of the recent RSI lows line. We can take this RSI lows line here. We'd have to break below it before we can see the market really inviting lower aggressive prices, which, by the way, as a side note, is probably where I am leaning that the market is going, but that's for another video. And we can see that there's another line connecting RSI lows going back all the way to early 2020, connecting the lows of September here and the lows of November. So this second blue line, let me take that stuff out, is the primary line to watch because it's a well-established line. A break of this line and markets are gonna see a substantial pullback. So we can see if, in this example, what happens when you move above a divergence line. It is actually a bullish development. And by the way, this also happens to be a breakout above the prior high. So again, we go back to the idea of using breakouts for momentum swing trade timing. Now, let me answer the same question from another way, which is the prior example I had drawn, which is this area here, the previous divergence here. Now, of course, that divergence led to a pullback in prices for a swing trade lower. Now, we're going to take the same line and we're going to extend it out. And you'll notice here that it gives us a shallow, in other words, the same line is relevant even here. Now, it turned into resistance here for this rejection area in prices. We get a shallow pullback. And notice now what happens when we clear the line here. We get a shallow move to the upside. And now what I'm going to do is extend that line all the way down. So you can see that the market, in a way, is aware of this line. I'll draw it like that. Let's take a look at some areas here on this chart to confirm that the market is aware. We move above the line here, which is this period. We find support below the line back above it, which is this area here. We stay above the line and we come back and test it here successfully with uniform action. We go below the line and back above it with uniform action. Also happens to be RSI 50, uniform action support. And that's another area of the chart that tends to give good reversals, especially if there's uniform action. So from this negative divergence line that began here, we've just extended it out, okay? And we can see how relevant it has become. And it also means that down the road, the same line, if the market bounces on this line, could actually indicate support down the road. And a break of this line would also give us some information as to the market's intention. So I always say it's good practice to extend valid RSI lines because they become relevant down the road. So don't throw away your negative divergence lines. Keep them on the charts because they can give you a situation where you can actually take advantage of movement above the line, just like we did here, for a successful swing trade to the upside. And in conclusion, one final note, we can see that in the current market, there's another variation of negative divergence. This instrument has seen a sharp increase there. Your RSI has made a lower low, but the key takeaway from a visual perspective is this uniform action above RSI 69.1 and back below it. That in itself can be a signal of an impending stronger reversal, and we're already seeing that this instrument, as of right now, is responding to that RSI 69.1 uniform activity rejection. And these types of setups can actually bring an end to a big run. But remember, we've discussed this line here. This line would have to be broken to the downside before we can see the invitation of a massive plunge. This is Eric Muadh with Muadh.com. Love light, light love. Namaste.